Okay, so good evening, everyone. So we are starting with the introduction to taxation. So we'll be looking at the definition of tax, objective and purpose of taxation, types of taxes and tax system, basic concepts in taxation, principles and canons of taxation. We'll also look at differentiation between taxes and levies. We'll look at enabling acts. We'll look at the sources of Nigerian tax laws. We'll look at multiple taxes, objective of tax identification number, process involved in generating a tax identification number and its uses. We'll look at the history of Nigeria tax system. So let's start. So we'll start with the definition of tax. So as we all know that tax is a compulsory levy that is imposed on the citizen of a country, and it is usually imposed by the government of that country. So um let's look at the definition they gave us here. They said there is no attempt has been made to define tax according to Nigeria tax laws. However, the Oxford Advanced Learners Dictionary define tax as the money that you have to pay to the government so that it can pay for public services. Black Law Dictionary define tax as monetary charge imposed by government so that it can pay for what public monetary charge imposed by government on persons, entities or property levied to yield public revenue. Thomas Cooley defined taxes as enforced proportional contributions from persons and property levied by the state by virtue of its sovereignty for the support of the government and for all public needs. Something is common to all dis definition: the fact that it is imposed by government, the fact that it is levied by government. Then another word that is common is enforced, imposed, like it is compulsory. Do you understand? So it is compulsory, it is levied by government, and it is for public service. Those three things, whenever you are asked to define tax, must always be in the definition of tax. So in simple terms, tax is a compulsory contribution levied by a sovereign power on the incomes, profits, goods, services or properties of individuals and corporate persons, trust and settlement. So we have other definitions too, but in every of your defining, anything you are defining, you must not miss those three elements: compulsory, imposed by government, and for public purpose, for the purpose of government providing service for public purpose. So those three elements must always be in whatever you are defining. So let's just quickly move and not waste our time. Let's move to the objective and purpose of taxation. Why tax? Why am I paying tax? Why do we have to pay tax? So in most countries of the world, the primary objective and purpose of taxation are essentially to generate revenue or raise money for government expenditure on social welfare. So the reason why government is enforcing tax on people is so that they can be able to generate revenue for government expenditure for the public, to provide services and goods for the public. So apart from this, the use of taxation as an instrument of economic regulation. So if you notice now, these points are being lumped up together, so it will be good if you can separate it, or let's see how it goes. So we have that taxation can also be used as an instrument for economic regulation. Government can use tax to regulate what? The economy. I think they use tax and public expenditure. Those are two key instruments that they use in regulating the economy. So thus it has been stated that the importance of taxation lies primarily in its ability to raise capital for public sector, for the development and growth of the economy, and also in assisting in regulation of consumption pattern, resulting in economic stabilization and effective redistribution of income. So today, taxes have an important role to play, especially in any government economic and social policy. So they have taken their time to highlight the major objectives. Why is government collecting tax? So what is the objective? What does the government think about when they want to get tax from their citizen? Number one, revenue generation. So the primary objective, the main reason why government is generating or collecting tax is so that they can be able to what? Provide public services such as defense, health service, education, capital project like roads, infrastructures and all of that. So the major reason why government, it's not as if government sells their goods or their services to get money. So the only way for them to get money, they don't make profit on anything they do. So the only way for them to get money is through your taxes. So another reason or another objective for taxation is the redistribution of income and wealth. So this can be looked at from two angles. The first is the doctrine that taxation should be based on the ability to pay, so that the burden of taxation ought to be heavier for the rich than for the poor, with the taxes collected being used to pay for social services for the less fortunate. So there's an angle that says taxes are collected to redistribute income and wealth. What do they mean? They mean that if we have the rich and the poor, which is the major two major wealth segments in the country, we are taxing the rich more than we are taxing the poor, and that is what the current tax law is doing now. So they've revised this in such a way that we are not taxing poverty, so to say. So if you are earning below 800,000 per annum, you are not supposed to pay tax. So it's just a way of is a way of ensuring that the rich pay more than the poor, or you that you are earning higher, you are not paying less than somebody that is earning lower. So the objective sees that the present distribution of wealth has been unjust, and also attempt to reverse the situation by fixing taxes at concessionary rates. High taxes on the income and wealth of the rich can produce either incentive or disincentive effect. Sometimes a taxpayer disposable income is reduced through taxation, so is compelled to work harder in order to meet its financial commitment. So taxes that produce incentive effect therefore increase productivity. So another way is that, okay, if we actually now charge high taxes on both, maybe we are now using a rate, for example VAT, everybody has to pay 7.5%, so whether you are rich, whether you are poor. So that kind of also increase economic efficiency, or it also increase economic productivity, because you want to work more, so that whenever tax is deducted you still have enough money to spend. So that's another reason for the redistribution of income and wealth, just majorly charging more for the rich people and charging less for the poor people. So we have another point, which is management of the economy. Taxation can be used to manage the economy. It can be used in planning of savings and investments, and by harmonizing it with developmental strategy and changing economic structure. The government can use taxation as a powerful fiscal weapon to plan and develop the economy. So this is just talking about if government does not want some, goods and services to be present in the country. For example, tobacco. What they will do is to use tax as a tool to regulate that. They will increase taxes on such goods and services so that it will discourage consumption. So this is another objective of taxation, to regulate the economy, to ensure that there is stability. It is used as a fiscal weapon to make sure that the economy is okay, is balanced and everything. So we have another point, which is harmonization of economic objective. So tax can also be used by government, or let's say, for example, they gave example of ECOWAS. We can use tax to ensure that we can do free trade in some countries. Maybe they remove tax or they impose tax. So it's just to ensure that there's harmonization of economic objective there because of the tax system. So coming together of different countries to agree that, okay, if you import goods to my country, if tax has already been charged in your country, it will not be charged in my country. So it can also help in the harmonization of economic objective. So finally, taxation is a device to improve gross national income, induce economic development, and influence favorable balance of payments with other countries. So let's move to the types of taxes and tax system. So what are the types of tax available? We have the proportional tax. So this is a form of tax that assess a taxpayer to tax at a flat rate on his total accessible income. Therefore, the tax payable is proportional to the taxpayer income. So this is just, let me give an example. Like if you have, in a country now, they are saying that everybody, regardless of your income, you are paying 5% tax. So that is proportional tax. We are not considering the poor or considering the rich. We are not considering whether you have more money or you have less more money or less more money. What we are just considering is that we have a flat rate, and that's an example. An example will be VAT. We have a flat rate, whether you are rich, whether you are poor, this is what we are charging on your income or whatever you are buying. So the objective, it is a tax, the objective of which the redistribution of income from well-to-do to the less, I don't know what they are writing there. Okay, so progressive tax. Progressive tax is a form of tax that is graduated as it applies to higher rate of tax as income increases. They used to tabon inside this ICAN pack too much. So what this one is just saying is that the higher your income, the higher your tax, right? This table now is outdated, but this used to be the former personal income tax table for Nigeria, but now it has been revised. So you see, if you have first 300,000 as at then is 7%, the next 300,000 you have 11, next 500,000 you have 15, the next 500,000 you have 19, over 1.621. So you can see that the higher the income, as the income is increasing, the tax rate is also what? Increasing. So another type of tax is regressive tax. Regressive tax. Under this type of tax, the tax payable decreases as the taxpayer income increases. So it's the opposite of progressive. So as your income is increasing, the tax you're supposed to pay is what? Is decreasing. So another type of tax is based on the classification or by incidence, which is what? Direct tax and indirect tax. So if you are talking about direct tax, is a type of tax that is paid on your income, your property, your profits directly on the taxpayer's income, um profit or property. So we have examples like personal income tax is a form of direct tax. It is charged on your salary, it's charged on your income. We have company income tax, charged on your company's profit. Capital gain tax, charged on whatever you are disposing, any asset you are disposing. Tertiary education tax and hydrocarbon tax. So these are examples of direct taxes. Then we have indirect tax. um Indirect taxes are imposed on commodities before they get to the customer, or before they get to the consumer, and are paid not as taxes but as part of the selling price of a commodity. A very good example is VAT, value added tax. So if you go to a restaurant today to eat, you'll be charged VAT, and they will not tell you that you can pay the VAT at the end of the month. Like, you have to pay the VAT now together with the food you have bought or whatever you have bought at the restaurant. So it's usually added to the selling price of a commodity, of a good, of a service. It's always added to the original price. It's not like a separate tax on its own. So we have stamp duty too, we have excise duty, and we have custom duty. So indirect taxes may affect the cost of living as they constitute taxation on expenditure. So we have tax system.
Okay, no, you're not fast.
All right. So we have tax system, and they said they usually involve three aspects. So when we're talking about a tax system, what are the elements of a tax system? What will I see and say, okay, this is actually the system of tax present in this, in this country. So let's go. We have tax policies, we have tax laws, and we have tax administration. So when we talk about policy, tax and policy joined together. Policies are guidelines, they are principles. So it's just talking about the guidelines and the principles that have been, established by the government of a country for the collection of tax, for the imposition of tax. So they gave us what it used to include. We have number one, movement of emphasis from income tax to consumption tax. For example, they are trying to bring down, if you notice what happened in Nigeria, they tried to adjust personal income tax, but what happened to our VAT went up to 7.5%, and there are some other taxes that are indirect taxes that also, went up. So they are moving emphasis from income tax to consumption tax. Then, pursuance of a tax law regime within the aim to reducing individual tax burden, widening the tax net and encouraging savings and investment. So there are some countries where you see that the tax burden on individual is usually lower, but when it comes to getting everybody involved, like catching even the informal sector, people that are not doing the regular employment work, doing the regular 9 to 5, to catch them into the net of tax. That's where withholding tax is a very good example, where when you render a service to somebody, the person removes withholding tax from the amount they are supposed to give to you for that service. So that way the government is using you as a tax collector, is using you as a tax agent to collect tax on their behalf. And also, if for example the company that remitted that service, that rendered that service to you, is not under the tax umbrella, is not has never filed tax before, for example, but you've remitted tax on their behalf, right? You've put their name, maybe when you were doing your withholding tax remittance, you've kind of put their name under what you are remitting. That way they are able to get more information, then they'll start looking, who is this person, who is this person. From there they will catch a lot of people that have not been remitting their taxes. So that's another element of tax policy. Then, introduction of the self-assessment scheme. I think this happened recently in Nigeria, where they are telling everybody you have to file your tax. It was all over the internet. If you don't file your tax, you are going to 6 months imprisonment, this one, that one. They are going to do this one for you. So some people even said they are going to ban your, is it NIN? We're just carrying fake rumors, but the goal was to ensure that every citizen, from the comfort of their home, from wherever they are not forcing them to file tax. There's self-assessment. Let's come and tell us what you have. Let's see what you've remitted so far. Let's see what you are supposed to remit. So it's just kind of promoting and encouraging tax participation. Then another element is tax law. So when you see a tax system, it usually have tax laws. So tax laws in Nigeria, we have personal income tax law of 2004. We have company income tax of 2004 as amended. We have Petroleum Industry Act of 2021 as amended. We have capital gain tax 2004 as amended. We have VAT 2004 as amended. We have tertiary education trust fund 2011. We have stamp duty 2004, various finance acts. So now you will add Nigerian tax law 2025. So those are the current tax laws that we have prevalent in this country. So that's also another element. Then the last element is tax administration. How do they collect tax? When you talk about administration is majorly how is tax, accounted for, how is tax collected, how is tax, administered. So who are the people in charge of this? There are three tiers of government, as we all know. We have the federal government, the state government, and the local government. So for each of these tiers of government, there is a how do I put it now? There is a section of the law that applies to them. So we have the Federal Inland Revenue Service, them, the FIRS, but their name has now changed to NRS. So please, I don't know how it's going to be this diet. Maybe you have to start stating all these changes, or maybe all these old names will still be allowed, but just if you can write the new name, fine. So it's good to update your answers, because we don't the park is currently not updated to the current Nigerian law now. So we have State Internal Revenue Service, then we have the Local Government Revenue Committee, Section 90 of Personal Income Tax, LFN 2004. So those are the laws that guide the three tiers of government, how they derive taxes from individuals, from government, from companies, from trustees and settlements and all of that. So don't forget that the three elements of a tax system is tax policy, tax law and tax administration. So let's look at the basic concept in taxation. What are the concepts, what are the things that you always come, what are the terms that will always come about when we are doing this course? We have tax base. Tax base is what you are basing or what you are putting or assessing your tax on. So you think of your income, think of your property, the item that is going to suffer the tax. That is what your tax base. They say is a measure upon which the assessment or determination of tax liability is based. It is that portion of a taxpayer income or property which is expected to what? To suffer tax. So we have tax yield. As the name implies, yield. What is yield? Is total revenue that a government will what? Collect from a specific tax. So it's a product of your tax rate and tax base. That is tax rate times tax base. The word product is multiplication. So it's a multiplication of your tax rate by your tax base. So we have tax rate. What is tax rate? This is usually expressed in percentage. It is the ratio on which your business, your income, whatever you are doing will be taxed. For example, value added tax rate is 7.5% on vatable goods and services. Then we have tax incidence. Tax incidence. This one is just talking about who bears the burden of tax, who is supposed to pay tax. They say it's an economic term for the division of a tax burden between the buyer and the seller. It reveals the person who ultimately bears the economic burden of the tax as against who initially pays the tax. For instance, if the government imposes an increased tax rate on cigarettes, the producers may increase the sales price by the tax increase, thus passing the burden of the additional tax to the consumer. So incidence is talking about who carries the burden. Then tax burden itself is the amount that the person is going to pay, amount that is levied on your income, on the tax base majorly. So the amount that is levied, the amount of income or consumption tax levied on an individual or business. Then what is tax impact? So we have tax impact is the effect of a tax on the production or consumption of a product being taxed. Okay, I think I gave this example earlier. So for example, the tax impact of raising the levy on tobacco might be a reduction in tobacco sales. Yes. So if they increase tobacco price today, you see that if the company was receiving 1,000 orders before, what will happen? It will drop. That's the impact of the tax on that commodity. Then we have tax shift. Tax shift is also referred to as tax swap. It is a change in taxation that eliminates or reduces one or several taxes and establish or increases the other. So if you look at the trend so far in Nigeria, you see that some taxes has been eliminated while some taxes have been increased. So for example now, I don't even know a perfect example right now, but I know that there are some times that government make policy to move away tax from a particular type of tax, then move it to another type of tax. So that's tax shift. They are shifting, they are eliminating, or sometimes sef they can just reduce it, not totally eliminating. They'll just reduce one tax then add it to the other one. So that's tax shift. It's also known as tax swap. Then we have tax, but what you need to note under tax swap is that at the end of the day, the overall revenue that government makes remains the same. So the overall revenue that government makes remains the same. So we have tax effect. So tax effect is the general term that describes the consequences of a specific tax scenario with respect to a particular tax paying entity. So tax impact is different from tax effect. So the effect of tax is what will be the consequences in relation to an entity, to the person, to the individual paying that tax. What will be the consequences of that particular scenario? What will be the consequences on that person that is paying the tax. So we have so um so for example, now let me just explain further. For this tobacco now, if this person, after government has increased the amount of tax on that particular commodity, but the customer still went ahead to buy, what will happen to the person's income? It will reduce. What will happen to the let's say the people, the producer, is it producer now, or the people that are selling tobacco themselves, if they refuse to pass the impact of that tax to the consumer, what will happen to their profitability? It will decrease. And if care is not even taken sef, it can frustrate investment in that particular sector. Like they be like, tax in that area is too much, let me put my money in somewhere else. So it can also discourage private investment. So let's look at the differentiation between taxes and levies. Are they the same? What's their difference? So we already know what tax is. That is a compulsory contribution imposed by government. Even though taxpayers may receive nothing identifiable in return. So it is not like a private sector where you pay money for to get a particular good or service. When you pay tax, you are not expecting to see the equal return, or if they like sef, they will not even use it to do anything in the country. So but you have to pay tax. It is part of your, is it duties as a citizen, to always pay your tax. So but levies on the other hand, um levies are paid to the government in return for a specific service by government to the taxpayer. For example, court fee. If you want is a payment to defray the cost of service undertaken by government in public interest. So um levies is usually because they are rendering a particular service. It might not be actually equal or equate to the cost of providing that service, but it's just like a relief to the government that, okay, you guys have also tried. We are contributing this portion to whatever service you are giving us in that area. So they gave an example of court fee. So it's a payment to defray the cost of the service undertaken by the government primarily in the public interest, but conferring a specific advantage to the taxpayer. While for tax, you are not expecting anything in return, you are not expecting any service in return. But for levies, you are expecting something in return. So another form of levies is fine and penalties. When you go against the law, is a form of punishment. You don't get anything return, but it's a form of punishment. It's just to punish an offender. So it follows that while all form of taxes can be described as levies, since they constitute imposition, not all levies can be properly described as taxes. For a purpose of illustration, while the tax imposed by Section 9 Company Income Tax Act on profit of companies accruing or derived or brought into Nigeria can be rightly described as a tax, the penalty and fine imposed by Section 85 subsection 1 of SITA can best be described as a levy and not tax. So if you refuse to pay your tax now and they charge you fines, that one is levy. But the tax itself is a tax. So the main that's what they are just trying to say. So when you are charged fines or penalties, they are levies, but the main tax remain tax. So tax, like levy, is involuntary in the sense that its compliance is compulsory, but is not intended to be punitive as a levy. That is not intended to be a punishment. It's not intended to punish the payers. So tax must be charged and exacted pursuant to legislative authority, that is supported by a particular written law. If there is an invalid tax law, a charge cannot suffice for tax. So what they are just trying to say is that tax is backed up by law, right? Is that there has to be a valid law that backs up tax. So if it is backed up by a valid tax law, it is tax, irrespective of whether it is described as a levy or tax. So understanding tax bases and their importance. So we have, I think that's a mistake. So this is still like differentiation between tax and levy. So we have, for the definition, we have a mandatory financial charge imposed by the government on income, goods or activities to fund public services. Then a levy is a term that includes both taxes but also refers to specific fees, charges or compulsory contribution for a particular purpose. So scope: tax is general, it applies to all individuals and all entities, but levy can either be general or targeted. For example, that court fee now is when you have anything to do with courts that you will pay. It's not that everybody in Nigeria has to pay court fee. Another example is road, toll gate. All this toll gate money is when you are making use of that when you go to that area or you are on that road, that's when they collect toll gate. It's not as if everybody in Nigeria, whether you are using it or not, you have to pay. No. So we have purpose. Funds general government operations. The purpose of tax is to fund the operations of government, while the purpose of levy is to fund specific projects or services. Then we have legal basis. It is imposed under tax laws. Then for levy, it can be a tax or special fee. It can be a tax or special fee, e.g. they gave us import levies and regulatory fees. So that's another. So flexibility: tax is compulsory, is non-negotiable, but for levies they are conditional. It's dependent on if you want to use that service. If you want to do anything in the court, you have to pay court fees. If you disobey traffic rules, you have to be punished. So it is conditional. Then we have example: VAT, income tax, corporate tax. Then for levies, we have road tolls, we have custom duties, environmental levies and municipal fees. Then key definitions: taxes are broader, levies can be specific. Taxes applies to all within a category. I feel like they're just repeating the same thing. So we have principles of taxation. What are the principles of tax? They are also called the canons of taxation. I think there are 7 of them. So we have equitable, certain, convenient, administratively efficient, we have simple, we have productive, we have flexible and what? Stable. So for equitable, this affirms that every taxable person should be taxed according to his ability. Thus, the rich should pay more while the poor should pay less. That one is very clear. Equitable, when something is equitable, it means it's equal. So not necessarily equal, it means that relative to your capacity, it is equal. That's just it. Then for certainty or certain, it means that the time of payment, the manner of payment and the amount to be paid should be certain and clear to the taxpayer. The determination of tax liability should not be left to the whims and caprices of tax officials. No tax official should come to your company today and say they are auditing you and you are not clear about the rules around whatever they are auditing. So everybody has to educate themselves. Everybody has to understand what the tax says about my personal income. What does tax law says about my company income tax? So you have to be sure, it has to be clear. How do I pay? How is it remitted? How much am I supposed to pay? It's supposed to be certain and it's supposed to be clear. Then convenient. The social and economic standing of the taxpayer must be taken into consideration. The time of payment should not be inconvenient to the taxpayer. Then administratively efficient. The process of levying and collecting the tax must be what? Economic efficient. So it means that so they've given us the elements. We have ease of compliance, effective enforcement and minimum distortion. So when we are talking about being administrative efficient, it's also talking about like the cost of getting. Okay, so the it has to be effectively enforced. It has to be easy, like people should easily comply to whatever we are doing, and that's it. Then we have simple. Tax system should be such that it is easy to understand by the taxpayers. And that's why they are always doing tax education. I remember when they released this new tax law where they had to get, I think, was it 50 content creators or 100 content creators. um they were looking for people to educate everyone, to educate the public about the new tax law. So it has, everybody has to understand how much they are paying, why they are paying this amount, what has changed. It should not be a news when the tax officers come. So productive tax system should be such that it brings in sufficient revenue to the government. Therefore, the cost of administering the tax should be less than the what revenue that such tax should generate. So, the cost of collecting tax should not be too much. The cost of ensuring that everybody pay their tax should not be more than the amount that we will get from the tax in itself. Then we have flexible and stable. A good tax system should be flexible enough for changes to be effected by any government any day. And that was why they woke up last year, December, or it was in November, and started saying that they are going to change Nigeria tax law. So it should be flexible enough, and it should be stable too. Must be balanced with, you need to have a stable, they don't say today now they will say tax is 7.5, next month they will say no, there's now changes in, it has to be stable. In as much as it is flexible, it has to be what, also stable. So let's go to differentiation between tax avoidance and tax evasion. A lot of students used to mix this up. One is a crime, one is not, or they are both crimes, but one is a criminal offense, while the other one is just a civil offense. So what is tax avoidance? Tax avoidance arise in a situation where the taxpayer arranges his financial affairs in a form that would make him pay at least possible amount of tax while still complying with the relevant tax laws. For example, avoidance of VAT can be achieved by anyone that does not buy the goods on which VAT is levied. Apart from boycotting the goods and services, tax avoidance scheme can be carried out after a critical review of tax law. So I'm very familiar with this. A lot of companies try to adjust their books, not changing figures, but what they do is that the elements that is supposed to be taxed, if the figures are quite high, they kind of adjust it, move it to another element that is not charged. Just like this example they gave, if you know that they are going to charge you VAT on a particular good and service, it's just better for me to get something else that I will not be charged VAT on. And apart from that, if you there are lots of loopholes in the tax laws, so if you can find them, you can use them. That's tax avoidance. So they try to arrange their statement, arrange your financial data, your financial affairs in a way that you will pay very small tax. Very small tax. So we have tax evasion. Tax evasion is a contravention of tax laws whereby, what happened? Okay. So it's a contravention of tax laws whereby a taxable person neglects to pay tax. This one
I
is
don't can hear you.
intentional.
I don't.
Yes, can you hear me? So we're talking about tax evasion. Tax evasion is when you contravene the tax laws, when you intentionally, like you did not intentionally but you refuse to pay your taxes, or you reduce the tax liability by fraudulent claims. Fraudulent means it's not legit. That's tax evasion. So tax evasion is the act whereby the taxpayer achieves minimization of tax through illegal means. It involves outright fraud and deceit. For example, deliberate omission of a source of taxpayer income. Probably you have three sources of revenue, now you now remove one so that government will not charge you tax on it. So that would automatically reduce your profit for the year and everything. From there, nobody will charge you tax, and you think you've escaped. The day they will come for audit and they will catch you, it's a criminal offense. So in Nigeria, tax evasion is on a large scale through the failure to render tax returns. Have you guys filed your tax for 2025? That's closed now. They are coming for you. So tax evasion may be achieved by understating your income, overstating your expenditure, making false claims for allowances and reliefs, and omission of chargeable income from tax return. So these are the comparison difference between. So whenever I wanted to mention, whenever you are asked to differentiate between something and something, always make sure it's in a tabular form. If you want to get more mark, have what we call maybe points, then the two whatever you are differentiating between. So if I want to differentiate between tax avoidance and evasion, I can say point legal base. Number one, legal base. So this one is legal, this one, or I can say number one, legality. This one is legal, this one is illegal. I can say number two, means, achievable through exploiting loopholes in the law. This one, achievable through deliberate action of fraud and what, and this the next one I can say result. That's how to earn all this one mark oh. That's how to earn all this one mark. So results in taxpayer paying minimum tax possible without breaking the law. This one results in taxpayer not paying correct tax or paying minimum tax through the breaking of tax law. This one supported by courts in decided cases. Decided cases, there's slim chance. Then no support by the court is not allowed at all. Then the next one, no criminal liability. This one, you should be charged to court for criminal offence with consequent fines, penalties, and at times imprisonment. So dependent on the tax provision, the tax law. What does the tax law says? If say 6 months imprisonment, you have to go. You say fine, you have to pay. So when stretched to the extreme, the scheme could be disregarded. At any level, do you know what that means? If you argue with the tax officers enough, you can win it, that what you did is right. That's when stretched to the extreme, the scheme could be disregarded. They can just say, okay, no problem, it's fine. But you have to work on your, this is not how you should be. They can just tell you this is not how you should be calculated. Next time, this is how you're going to calculate it. But you yourself, you know what you did. But for tax evasion at any level, revenue service will frown at it. Once they see it like this, oga, you enter court. So no revenue service investigation. Prior year assessment will not be reopened. But once they see tax evasion, they will now do what? They will do audit. And normal tax audit is 6 years at most if you want to go back. But this one, they will go beyond 6 years. They will go beyond 6 years to check what you have been doing. They can even say it since when you have started your business. Let us see your account. So you don't want to be in that position. So do not be involved in tax evasion. It's not good. So enabling acts. Enabling acts are statutes empowering a person to or body to take certain action, especially to make regulation, rules and order. So enabling acts is what is the law, what is the legitimacy of what we are doing, what gives you the power, what gives you the right to come and say you have to charge me tax and all of that. So in Nigeria, the National Assembly is responsible for making law among other. We call them the what? Is it the legislative now or the executive? They are the legislative. So they make laws. They make laws. So sources of Nigerian tax law. Where do we get all this tax law that is in place today, that we have today? What are their sources? We have customary laws. Customary laws are native laws. I don't know if you know all these Yoruba ancient, all these Igbo ancient taxes that they collect. So they are customary laws governed by tax of incomes, goods, and properties of persons or community within an ethnic group, including under this heading is the Islamic law, which is the basis for Muslim laws that are usually applicable in the northern part of Nigeria. So example is Shakole. Shakole in Yoruba land, you see um all this village herd, all this Oba, they will carry their farm produce. They will take a portion of it and take it to the king of their land. So we have Osusunku applicable in the eastern part of Nigeria. We have Zakat for the Muslim. So those are the types of customer examples, not types, examples of customary laws. So we have statute laws. Statute laws are the laws that are passed by the National Assembly, National and State Assembly, and the bylaws by the local governments in democratic government or decree. So it can be what? Legislation passed by National Assembly, State Assembly, bylaws by local governments, or decree if it's democracy o. But if it's a military government, it is decree or edict passed by them. So this legislation confer necessary powers on the taxing authority to impose taxes on the citizen, that is individual, companies, trust and settlement. So examples are, we have the personal income tax as amended, we have the company income tax as amended. So we have case laws too. So this one just arise as a result of judicial precedent. When they make pronouncement in the court of law on cases, it becomes a source of tax law. They will just start hearing them. According to the case of, they gave us example sef, case of Aderawas Timbers Trading Co Limited versus Federal Board of Inland Revenue Service 1966. The courts of law have presided, abi the judge presided that, so it becomes a source of Nigeria tax law. So then we have circulars issued by practices of the inland. Please take note of this part. They used to ask very well that what are the sources of Nigerian tax law. So at least you should be able to talk on them. Don't just list them. Say something the way they did. Try to say something on each of the points so you can have your full mark. Then we have opinions of tax experts too, so far as the courts take judicial notice of them. We have budget and pronouncement of relevant ministry. We have the constitution of the what? Federal Republic of Nigeria. Now let's talk about multiplicity of tax, multiple taxes. So this is a tax regime under which various and similar types of tax are imposed on taxpayers by different tiers of government. Want to collect the same tax from one person or one entity, but by different governments, different states, federal, local, everybody is collecting the same tax. So particularly guilty of the problem of multiplicity of taxes are the local government. I think they have about 20 taxes that they collect. They collect a lot of tax to the point that they will even say that you are supposed to pay this tax. It might not even be part of the one that they are legally allowed to collect. So, and it leads to what? I mean, they should be collecting the one that is due to the state government. They will say it's also part of their own. And by the time you come and they scatter all your markets, you have no choice than to pay. So, types of multiple taxes. The types of taxes introduced and collected by local government vary from one government to another. So, we have entertainment tax, road tax, permit for closure of streets, refuse collection tax, market taxes and levies, loading and offloading. So, this list is endless as some local governments are on record as having over 100 taxes, but they are only allowed 20 under the law. But some of them, they said they take as much as what? 100. So what is the reason? Why is this happening? Inadequate funding. You will see state governments, particularly for state government, they may result in, when the state attempt to source for fund through imposition of tax, you start seeing them imposing tax because they don't have enough money to fund their public expenditure. You know what drives government is not revenue. What drives government is expenditure, what they want to, the projects they want to do. So they are looking for money to finance public expenditure and not the other way around. They are not looking for revenue. Revenue is not their drive. But I don't know about Nigeria sha, but revenue should not be their drive. Their drive should be public expenditure. How do we finance this? These are the projects we have to do. How do we raise money? So you start seeing them imposing different type of law because they don't have enough funding. Then another reason is some state government deliberately denying their local government. Yes, there's something they call, they are supposed to allocate fund, allocation of fund to local government from the state government, but no, it doesn't go to the local government. So what will the local government do? They have to survive. They also have projects. They also have things that they want to do. And if they don't do them, there's stewardship, there's accountability, there's supposed to be, there's transparency at the end of a fiscal year. So they have to also find way to survive, find way to generate revenue. Another reason or another cause is lack of tax education and awareness. That's why read your tax laws. Read your tax laws. If by the time they come and say they are supposed to collect this now, you quote section one subsection two for them, they know that this person is not who they can, just come and collect money from anyhow. So lack of tax, when you don't know what to pay, you sef, they are supposed to, you bring money, yeah, you bring the money. So you need to be aware of what the tax law says. Then we have all the tiers of government
This
usually
talk is
fail.
being recorded.
Are you saying something?
Yeah, I say, is it recorded?
Yes, yes.
Okay.
So all the tiers of government usually fail to adequately fund their departments and agencies, thus making them resort to what? Imposing legal levies and taxes. So we have all the tiers of government. We have ministries, they call them MDAs, ministries, departments and agencies. So if they don't have enough fund, what will happen? Everybody will start. If you go to the Federal Ministry of let me say justice, for example, no, you have to pay for this one, you will first pay 500 naira for this one before they can call you to the queue. When you get to the queue, you start hearing, no, there's one money that you have to pay. So everybody is just trying to raise fund for themselves, because whether the local government that is financing them did not finance them, or the state government or the federal government is not financing them. So everybody, departments are now even going out, agencies are going out, not going out, but there are people that are coming to get services, public service for free. They are taxing them and all of that. So we have multiplicity of revenue agencies, different revenue agencies. If you get to Lagos now, you see different, this one is from that unit, that one is from this unit, this one is Alimosho, this one is Ikeja, this one, everybody shall have their revenue collection agency. So there are a lot of them. So by the time this one come, that one come, and they are collecting the same set of tax. So it will lead to multiple taxation. So we have overlapping tax rights as contained in constitution and tax levy approved list for collection. Yes, if you look at this law that they are talking about, I think we should meet it one way or the other. You see that the state government taxes and local government, there are some that are in the states that are also in the local government. So government needs to look into it to ensure that the right of the state is different from the right of the local government, so that we don't start charging the same tax in five different places. So we have manual tax administration and an unorthodox tax collection. I think this one is improving, but I don't know if it's applicable in the local government. I think they still go shop by shop, company, not company by company, kiosk by kiosk, market by market to collect tax, and they'll tear paper or tear tickets for you. So if it is more, organized and modernized, um tax collection will be better, and nobody will charge you more than once. You understand? So, collection of multiple taxes. The greatest problem of multiple taxes is that of their enforcement. The way they collect it is annoying. So, number one, mounting of roadblocks. If you are traveling, most especially by road, you see they will put tires on the road, you get, just to stop you, put stick, put everything. When you get there now, you have no choice than to stop. And when you get to that bus stop, what would they ask for? Money, the one that they will not even remit to the government. So that's one of the ways they collect it. Then use of revenue agents or consultants. When they come for tax audits, when some state governments employ external tax consultants for tax audit. So we have the one also collected under the Accelerated Revenue Generation Program. We have JORA, Joint Revenue Association. So these guys go from company to company and do what? Use the first taxpayers you have to pay. They harass them and all of that. So mounting of roadblocks and use of revenue agent. This is one way in which they collect what? Multiple, the ways in which they collect multiple taxes. So federal government solution, what is government doing? What is the federal government doing to ensure that this multiplicity of tax problem it has gone or it is reducing? So they said following the outcry of the citizens to the problem of multiplicity of taxes, especially its unorthodox collection procedure, the federal government released this approved list of collections that still have overlap sha. So the purpose of this act is to resolve the confusion created by the multiplicity of taxes imposed by the three governments, namely federal, state and government. So it lays down in clear terms the types of what taxes collectible by each tier of government. So I'm going to give you an assignment. Please note it down. Um Go and source for the types of taxes collected by the approved list of collection. What are the taxes collected by federal, states, and what and local governments? Did we catch that?
Yeah. Can you come again?
So according to this tax and levies approved list for collection, this act caps T2 LFN 2004 as amended, give us the list of the approved taxes that to be collected by federal, state and local government. So they didn't list it out here, so let's just do our findings. So the 1999 constitution and the multiplicity of taxes. This is another story, but the 1999 constitution of the Federal Republic of Nigeria seeks to eliminate multiple taxation. No wonder the network is bad. It's raining. So the 1999 Constitution of the Federal Republic of Nigeria seeks to eliminate multiple taxation at all levels of government as provided for in Part 2, paragraph 7 to 10 as follows. 1. In the exercise of its power to impose any tax or duty on 1. Capital gains, income or profit or persons other than company and documents or transaction by way of stamp duties. The National Assembly may, subject to conditions as it may prescribe, provide that the collection of such tax or duty for the administration of the law imposing shall be carried out by the government of a state or other authority of a state. So this is just telling us about how the Constitution of Nigeria was able to eliminate multiple taxes. So and they said one way is to ensure that all these taxes that they just stated, capital gains and stamp duty, is collected by the state government. Then another one is where an act of the National Assembly provides for the collection of tax or duty on capital gains, income or profit or administration of any tax law by an authority of a state in accordance with paragraph 7 therefore thereof, it shall regulate the liability of tax of persons to such tax or duty in such manner to ensure that tax or duty is not levied on the same person by more than one state. What does this one mean? So, where an act of the National Assembly provides for the collection of tax or duty on capital gain, income or profit or administration of any law by an authority of a state in accordance with paragraph 7 thereof, it shall regulate the liability of such person of such tax to ensure that the tax is not levied by. Okay, so this one is just saying that um whenever the law says that there should be a collection of a particular tax, this constitution is ensuring that that tax is not levied on one person more than one state. Like they're not having the three tiers of government to collect the same tax from the same person. So another provision is that a house of assembly, subject to conditions as it may prescribe, make provisions for the collection of any tax, fee or rate or the administration of law providing for such collection by a local government. Then the last one it says where a law of a house of assembly provides for the collection of tax, fee or rate or for the administration of such law by a local government council in accordance with the provision thereof, it shall regulate the liability of persons to the tax, fee or rate in such manner that it is not levied on the same. So everything are just saying that The House of Assembly has done it. They have administered taxes in such a way that it is not levied on more than a person at a time. Not even at a time, like forever. If I'm paying one tax, I should pay that tax for that period. I should not have any reason to pay again, either to the same person or to the same government or to a different government. So okay. So we have other possible solution to multiplicity of taxes in Nigeria. The federal government addressed the issue of reviewing the existing taxes in Nigeria and harmonizing them. So these are the things that government did. They reviewed our existing taxes and they tried to harmonize them. They reviewed the constitution to address any overlapping taxing rights. Let's say they've given power to states and local at the same time. They are doing what they reviewed the constitution. Then they abolished unorthodox method of tax collection. Yes, that is they are trying in this, and we should not lie. Now we have Rev 360, we have tax boomers. So they are coming up with technologies that can actually help to do what to make tax collection easy and to administer tax. So limiting the number of revenue agencies. So they have also tried to do what limit the number of revenue agencies. So now let's talk about the objective of tax identification number. The objective of what tax identification number, that's tin. Okay, so tax identification number is a unique number allocated to each taxpayer with a view to identify an individual, business or any other entity on tax returns and other documents filed with the tax authority. So they are not giving you tin because they want to. So they are giving you tin as just like an identification means, a means of identifying who you are, who your business is. So you see, if a lot of people before they go into business, they'll just tell you, please, can we have part of know your customer. They will tell you that you should give them your identification number. So that is your ID under the tax law. That's how you are known under the tax law. Um so let's look at the objective of introducing tin. So what is the objective of introducing tin? So one, to create a closer linkage between tax authority in Nigeria. Yes. So another one is to aid cooperation and information. Like with your tin, I can easily pull out a lot of things as a government official, or I can just check as this person, when last this person pay tax or this particular tax or stuff like that. So another one is increasing revenue generation accruing to all tiers of government. So we have the process of generating a tin and its uses. So a tin is a distinct identifier issued by FIRS, now NRS, to individuals and businesses for tax purpose. So process of generating a tin. How do you get your tin? First, you need to register. So you register with your international passport, NIN, or any valid means of identification. You submit your certificate of incorporation for companies and business name registration certificate for enterprise. Wow. Business name registration certificate for enterprise. So once you do that, I think the way it works is you do it on their portal. Once you do that on their website, it's immediately generates your TIN. So they will verify your documents and they will give you your. In fact, the one we do or we did recently, it was less than how many seconds. Immediately you receive your TIN once your documents are. Is it immediately or it takes? I think it took like 2 days, not immediately, but for the individual one, it's almost immediately you get your TIN. So but for company they will need to check all your documents. So we have uses. What do we use it for? Why are they stressing us to get in? Filing of tax return, yeah. Payment of taxes, registration of business name, opening of bank account. Yes, if you want to open a business account today, they'll ask for your tin. If you want to get government contracts, but here this one very important, they will ask for your tin. Then application of what? Of loans. So we have history of Nigerian tax law. Um so okay, let's look at the history briefly. It's story sha. So the history of taxation in Nigeria dates back to the pre-colonial era, before the colonization of different entities which are later amalgamated under the name Nigeria. There were different systems of taxes existing in the forms of compulsory services, contribution of goods, money, labour, etc. amongst various kingdom, ethnic groups and tribes, controlled by traditional rulers in order to sustain their monarchies. So they said before we have all what we have today, we've had the local rulers, traditional rulers, collecting taxes for people. It can be in form of labor, it can be in form of money, it can be in form of what their farm produce and all of that. So the deportation of King Jaja of Opobo in 1893 due to his opposition to imperialist taxation is illustrative to this point. The traditional rulers imposed taxes in one form or the other on their subjects. So these taxes took the form of zakat, levied on the Muslim for educational, charitable, and religious purposes. We have kudin kasa, a form of agricultural tax on the utilization of land. We have shuka levied on the ownership of cattle based on the number of cattle. We have Ishakole, contribution of farm products as a form of land tax in exchange of the use of land for agricultural purpose, payable to the obas, the chiefs, the family, or community heads. Then we have Owori, is individual taxes payable in cash or kind in return for services. Then we have war tax, is payable by a vanquished community to the victorious one after a war. We have community tax. It is payable by all adults within a community to execute project beneficiary to the community. We have Osusu, we have Imachunku, levies for palm fruit. Taxes are payable by those who harvest palm fruit and who are expected to contribute certain sum or a portion of their palm fruit and palm kernel oil. In Rivers and Bayelsa, we have block hunting and finish fishing taxes are also forms of taxation whereby male adults offer assets in form of canoes, boats, nets and other fishing equipment to fish jointly, while female adults sell the harvested fishes and the sales proceeds are used in financing community projects. So Nigerian taxation is present form is traceable back to the establishment of a British colony on August 6, 1861, and subsequent amalgamation of the Southern and Northern Protectorate of Nigeria in 1914. So during the colonial era, the imposition of the type of tax on citizens, individuals and corporate took the form of promulgation of laws by the colonial authority. So we have example of the laws that were existing as at then. We have the Proclamation Law of 1914. We have the Native Law, which is applicable to the Western Nigerian. Then this law was enacted in Eastern Nigeria in 1929. So one of the features of this law was that for the first time, it imposed taxes on women, resulting to the Aba Women Riots of 1929. Then we have the Non-Native Protectorate Tax Ordinance. So the above tax law were administered on individual and corporate entities by tax controllers. So at the end of the day, in order to achieve uniformity in the system of taxation throughout the geographical entity called Nigeria, the colonial government decided to set up what we call the Raceman Commission in 1958. This commission introduced uniform basic income tax principle for all regions in Nigeria. The recommendation was accepted by government and it was incorporated in 1916 constitution of the FRN. This led to the promulgation of the Income Tax Management Act of 1961 and the Company Income Tax Act of 1961. So this legislation were now reenacted into what we have today as our Personal Income Tax Act 2004 as amended, Company Income Tax Act 2004 as amended. As a result of the reassessment carried out by the Law Review Commission, these laws have been reviewed and codified and included in the Federal Republic of Nigeria 2004 with some amendments in 2007 and 2011. So, with this, we have come to
Yeah.
the end of this topic. We have some worked example. Let's look at it. It said the structure of Nigerian tax system basically deals with classification of tax. So, I think somebody should unmute and tell us what is the difference between direct and indirect tax. Who wants to try?
Okay. I think direct tax is levied directly on the income.
Okay.
That's like our income tax and company income, personal income tax, company income tax, and that. Why indirect tax could be like our VAT, withholding and the likes.
Okay.
That's
But you've not
yeah,
given me
that.
definition for indirect.
Like indirect tax are taxes that are not that are levied on goods and services. So people are not directly aware that they are paying it. It's like
Okay, so they are passed, yeah, they are passed to the consumer in form of
yeah,
they are added to the price of the goods and services.
price
Yeah.
of that good, yes.
Okay. So we have explained the following: progressive, proportional, and regressive. So I think these are stuff that we've talked about. I just want to look at we have four principles of a good tax system. Who remembers that one? Okay, I think that's not even the one I wanted to
I
ask.
think one of them is it not is it should be easy to be collected to be understood something like that. It should be understandable, easy
Yeah,
to understand. Yeah. Um.
we have
Shambhala.
simplicity, we have convenience, we have
Administratively efficient.
yes, we have productive too. I think there are about seven of them. So
Onto
yeah, so three aspects of the tax system. Who remembers? This is a past question. This number four is a past question. Oh yeah, now who remembers tax system that we said that these are there are three, and these are the things that
yeah,
that
I
you will
think
see. Mm-hmm.
it's tax evasion.
No,
Okay, that's not it. I'm not sure I
we have
remember.
tax law. I've said one. Oh yeah.
Okay, tax policies
Then the last one.
and last one. I don't remember.
Excellent. Do you remember?
I don't remember.
I think
Oh,
I've
sorry,
forgotten
sorry,
too. So
sorry.
Sorry, baby.
we have let's just check. I know we have tax law, we have tax policy, and the last tax administration.
Administration.
Yeah. So let's look at this one that they said is a past question. This last question, yeah. Um, scrolling back. Please, help me source for the question. Let me check your past question guide and look for the question that relates to this topic. Tanua, please.
Right.
Um, So question four says Roslyn informed you that based on her Google searches, she has seen a lot of concerns being addressed by Nigerian taxpayers over multiple taxation. Explain the concerns of Nigerian taxpayer over multiple taxation and outline the causes, the possible solution to multiple taxation. Oya, whiz discussion. Let's discuss. What are the causes of multiple tax?
Local government.
Hmm?
I think local government, they are cause.
No, that's not the cause now. Why is local government disturbing you? I think that's how we should ask.
Oh, okay. Because of there's no adequate money to solve for government expenditure.
So my
Lack
network
of
is kind of bad. I think my network is
sorry
bad. So
sorry.
I'm trying
So
to.
so we have lack of adequate funding, right? Lack
Yes,
of adequate
yes.
funding to local governments, lack of adequate funding to state governments.
State government. Mm.
Another one is MDAs, lack of adequate funding to them too.
Oh,
Then another one where I was saying that you have to know your tax laws. If you
yeah.
don't
People do
have
not know their.
awareness, yes, they don't know what and what is covered. Then lapping tax rights, tax powers that government itself give different tiers of government, overlapping taxing rights. You remember where the same set of what you put in the law that state government should collect is the same thing you put in the law that
Same thing
local
that local
governments.
government is collecting.
Exactly. So overlapping taxing rights. So they said what are the solutions? So I think they, yeah, they gave us solutions. So what do you think are the solutions?
Um, Number one, for the people, they should familiarize themselves with the tax
Exactly.
laws,
Exactly. Exactly. Then
and government should
mhm.
allocate more money to the local government and the state government
Mhm. Don't mix it
to
up. We
cover.
have kind of put 2 points in the same. So state government
Eh,
should release the fund that they're supposed to
State
give
government should
local.
release that local
Local
government.
federal too should release that for
Federal should
states.
give funds to
Local
state
should release
government.
for department, agencies, all of them. They should release for each other.
Okay.
Then
Um,
what else can you say? Another possible solution is the approved list now that we have. So everybody should follow the approved list.
yes, they are privileged to know
Yes,
the
to know
tax that they are entitled to
their
get.
entitled to. Yes, exactly. But you know that if you want to earn your money, they said explain. So you explain when they say outline, you write as you're writing that point like this, just put like a brief explanation at the front like that. So with that you should be fine. So what are the major sources of tax laws?
Major sources of tax
Where do they
laws.
come from? Hmm.
We have statutory law.
Are you sure that one is there? I know it's there,
It's
but the way you said it, I even thought
um
that the first one that will come to you is
it's traditional. They always I can't remember how it is.
customary law.
Customary law,
Customary
yes.
law. So the statutory law you're talking about is Constitution of Nigeria, right? Constitution of
Mm-hmm.
Nigeria. We have court cases too. All those ones should be dropping sharp sharp. Court cases where we're saying that if they go to the court and they finalize on any issue, any judgment that the judge make is also going to form part of the law if approved. Then we spoke about release by main ministries, by ministries, if there's any pronouncement by relevant ministries. So it's also another form of law. I think they're about 6 or 7. So what is the objective of taxation?
Oh Jesus. Objective of taxation. Let's do it. Um to fund government expenditure.
Mm-hmm.
Um to I don't know if this works, but to no, that's not it. What is going to my evenly distribute short of wealth.
Is correct now.
Really? I can't
Yes.
remember. Evenly distribution of wealth. Um
I think they're about 5. Purpose of tax. Objective of tax. Do I remember anyone? To regulate the economy. Remember
Okay.
when we said that when they increase tax on particular items so that it can, and not,
So
that's even like
yes, to
another point
discourage,
safe.
yes, to discourage
Discourage consumption of particular products.
consumption of some particular
Then we talked
products.
about
Yes.
balance of payments, having trade across borders, like to facilitate international trades and all of that. So
Mm-hmm. Because by reducing tax
mm,
levy.
exactly. So if you remove tax, if I've already charged tax in this my country and I want to export to a country that I have, they call it tax treaty. We have agreement together. We are in ECOWAS together and we know that
Mm.
this is the law. So that way it facilitates investments, international trade and investment. So I think that's pretty much everything. We've talked about the
Yeah.
principle, we talked about the types. So oh wow, you see what they did? Let me see this question one. Okay. Explain the following. They now put advantage and disadvantage. When people are taking note of how they are answering question. That's why I said if they ask you A, give them A, B, C, D, E, F, G. Because at the end of the day, you realize that the way they even answer, so they just ask for the meaning of direct tax and indirect tax. And I'm seeing them putting
If I don't know
advantage.
that's how the demand is allocated to the question.
So I'm seeing them giving advantage and disadvantage. So everything that comes to your head, and something that bring mark for ICAN is that when you arrange your answer, you see the way they arrange their answer. Another person could write this advantage, but would have put it under another paragraph in definition, right? You just put it together.
Mm-hmm.
It can lead to reduction of, but if you put them in bullet points, you put them into paragraphs, well, arrange it very well, in fact you will get all the mark. But I can still write this same thing and just put it chuku 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 inside. By the time they will mark it, they will not give me the mark compared to somebody that writes it out like this. So it's always good to not just read past question, but also read they answer the way they answer their past question. Very important. So do we have any um other questions that relate to this topic, so before we call it a day? um
You know the Apex did this.
so May 2024, question 7. So who is reading for us?
I'm coming.
Okay.
Trying to type.
Cambos Nigeria PLC. Okay, let me just read to save time. So Cambos Nigeria PLC is a company incorporated to manufacture and distribute food products that are widely accepted in many homes in Nigeria. It has operated for over 15 years since taking over the business of JHN Nigeria Limited. The main business of the main business of JHN Nigeria Limited was distribution of food items and other agricultural produce in the Africa Southwest geographical zone of Nigeria. The CEO of Campus Nigeria Limited, Mr. Babadada, was a former staff of Collinson Indian Limited for several years and thus brought into Campus Nigeria PLC a wealth of experience. Earlier in his working career, Mr. Babadada had worked with Kong Manufacturing Limited, a Chinese company, where he embedded the culture of collaboration with staff in the decision making process. Mr. Babadada is assisted with a formidable team of managers recruited with major food and beverage companies in the country. Management of Campus Nigeria PLC engage different consultants to handle professional issues, including consultancy matters in respect of law, medical, finance, tax, accounting, etc., which are outsourced to different well-known and competent hands. Your firm, Castman and Co. Chartered Accountants, were engaged to handle this both corporate and personal income tax matters. Required. So another trick is to read your requirements before reading the question, so that by the time you are reading the question, you already know the direction of where your answer should be. I don't know if that makes sense. So when you are reading, before you read the question itself, read the requirements, go to the question, then read the requirements again. So as the consultant, you have been requested by the managing partner, Casman and Associates, to explain to the CEO of Campus Nigeria Limited the following: one, professional issues that can be handled by your firm; five, main sources of Nigerian tax laws. I think that's the one that we've done. Five, allowable expenses in the ascertainment of the accessible profit of companies. So I think the only one we should answer right now should be the B. Five main.
Yeah.
So that question is question 7B, please. So five main sources of Nigerian tax laws. So I feel like we've already answered that question, right? It's not a question. We've talked about it. We've talked about customary law, statutory laws, case law, constitution of the Federal Republic of Nigeria, circulars issued by Inland Revenue, opinions of tax experts, budget and pronouncements of relevant ministries. So that's the answer to that question. So